Hi, I'm here with Les Simpson, President of Deferred Tax Benefits. Les, please tell us about the services that Deferred Tax Benefits provides.
Okay. Well, actually, the main one that we provide is implementing IRS Code 453, the structured sale, for people that baby boomers that are trying to retire. And the whole concept is CPAs, attorneys, commercial brokers don't know, most of them don't know this tool is available. And there's a lot of baby boomers out there that want to retire, but they don't believe they can because they're facing three fears. And that is, first off, outliving their money. And right now, 76,000 people in the United States are over age 100. And by year 2039, they expect 2 million. And so it really is a concern, a realistic concern of the baby boomers to outlive their money. And the second one is investment risk. They build up these businesses for 20 or 30 years, and they have no idea where they can, if they do sell, where they can reinvest the money that they're not going to lose it. Needless to say, the market's been volatile, and they don't want to put it in a CD and hope, get a little tiny bit of interest and high taxes on it. And third, as of January 1st, when a person sells a business or commercial property, the taxes have gone up 58%. So if a person, for instance, makes a $3 million profit, they pay $840,000 in taxes. And so there's a lot of people at this point, business owners, that are trying to figure out how to stay in business and not have to pay that $340,000 extra in taxes. And so there's a lot of people that need to know about. Now, 453 just is simply a tax code in layman's terms that means the buyer can pay the seller over a period of time. Now, the problem with that is, I think all of our viewers will agree with me, there's not too many sellers that trust a buyer to pay them over 10 or 15 years to even stay in business to do so. And if they don't stay in the business, then they have another problem. In fact, I think we've all heard a story like this one, where a gentleman has built a very fine restaurant for 15, 20 years, and then in his 70s, his health starts going and he knows he's going to have to sell. But he doesn't want to pay all those taxes. So he finds somebody that will tell him he'll pay over 10 years, and he trusts him. And then he goes down to Miami and starts retiring. And for 2.5 years, the payments come in great. But then they start slowing down, and then the third year they stop. And he comes back and he's heartbroken to find out his lifetime adventure has gone out of business. And so now him and his family, he's got an oxygen bottle in hand, and they're trying to figure out how to clean up this restaurant and get the customers back to continue the business. And unfortunately, repossessions happen a lot when you trust the buyer to pay you over a period of time. And the 453 allows that. The entity that allows very much flexibility is called an assignment company. And that's what I represent. Assignment company allows, it's an IRS-approved entity that allows the buyer to wire all the money to the assignment company, and they take the property and they're completely out of it. And we work with the seller any way they want the money over the next 30 years. And the one thing they don't have to worry about is investment risk, because all the money goes in U.S. Treasuries. And the government, of course, guarantees U.S. Treasuries. And so their money will never disappear, and is paid through a very special trust up to a period of 30 years. And so we solve those all three problems. Is we can pay up to 30 years, so if the person's 73, we can pay to 103. And if they're worried about the investment risk, it's U.S. Treasuries. And third, the taxes on that $3 million, we can defer that at $11,000 a month each month for the next 30 years. And bypassing the 58% tax increase, guaranteeing the person retirement and giving them some peace of mind.
Great. And now, do you have competitors in this space?
Yes, there's different competitors around, but very few people know about them. And they're kind of like myself. They have to go out and educate people. So there are ones out there that work, but there's only one company as far as an assignment company that works in this field. And I'm basically the regional manager for them, and I can work anywhere in the United States for it. And the other part great about this is it gives flexibility. For instance, when a person, 3 or 4 people go together, buy an office building or an apartment building, and then 10 or 15 years later when they decide to sell it, one of the biggest concerns is every one of them has a different reason for the money. Let's say one is only 55, one is 70, and then one is 65. And so the 75-year-old wants to retire immediately. And so we set them up for the structure there. The 65-year-old doesn't want to retire for 10 years, but he owes 2 or 3 other properties. He definitely doesn't want to get taxed right now on money he's not going to use. So we can actually take that and defer it, let's say like 10 years till he's 75, and then pay it out for the next 20. So it's very versatile. And the other person that owns the building, since he's only 55, and he just wants another building, we can actually 1031 it to another building. So it's extremely flexible, and it works well for investment groups on that, because now they can offer their investors flexibility as far as the exits, which really makes it profitable for the investors to find investors for their groups and their funds.
Great. And now you mentioned that, one of your challenges is having to market your services. So tell me about some of the ways that you've successfully marketed your services.
Well, I work with commercial real estate brokers. In fact, I have trained, anybody in this field knows CCIM. I've gone in and trained their brokers. I've gone in and trained Marcus and Millichap, ARA, and I'm in contact with some other brokers. So the people that are actually in contact with the sales and CPAs, and I'm also talking to attorneys, because one of the things this works fantastic for estate planning is we pay a guaranteed stream of income to a federal ID. That can be a company ID, that can be a social security number, but once the person dies, the payments continue. So if a person sold a $10 million business, they don't have to pay the estate taxes on that business. The amount coming in, the payments, is what's taxable, and you can actually transfer it into a trust for estate planning. So that's where, again, it's extremely versatile.
Great. Are there any other ways or use cases where this code is beneficial? Yes.
Another one is when the buyer and the seller can't decide on price. And of course, that's one of the things. I have an example, a REIT out of Chicago wanted to buy a apartment building. Well, the owner wanted $5 million for it, and they only wanted to pay $4.5 million. And they had negotiated for quite a while, and they're about ready to walk away from it. And they asked us to sit down with the seller and ask him, what was going on. And we did. And first off, the seller had no idea, after he paid the $1.4 million in taxes, what he was going to do to reinvest the money. And so he said, I need that other $500,000. I'll just have to wait for another buyer to come by. And what we did with the structured sale is we were able to take and guarantee him $17,000 a month for the next 30 years. Well, that was way over what he expected. And when he sells the building, he's now into capital gains, so his tax bracket really went down from 35% on the rentals of the building to capital gains of 15%, because we kept him under the $250,000 for the new tax hike. And so it actually can be, and then he was very happy to sell for $4.5 million, because he got what he wanted and the REIT got what they wanted. And so everybody was super happy. So it really could be used for that. And on my website, I have quite a few articles that I've had published that talk about this. In fact, it gives an example of how we keep a person under the 250 and the 450,000 tax thresholds that are there now. And so you can read the articles and understand much more about the taxes. And the other part is what I just mentioned, is owners don't understand when they own, for instance, own an apartment building, after all their expenses and so forth, they are on the ordinary income tax. And it could be 25, 35%. If they have the equity in the building, once they sell it, they actually increase their income 20 to 30, possibly 100%, just by selling their property. And by the way, if there's anybody out there that is trying to negotiate with somebody, if you use my articles to educate them, they really understand how they can better themselves by selling a property.
Great. Well, Les, thank you so much for taking the time to educate us about IRS Code 453. Mm-hmm. And if you're interested in learning more and connecting with Les Simpson, go to fundology.com.